Good evening, everybody, and a very warm welcome to the Fifth Estate at the Wheeler Centre, our first for the year, our third year now. I'm Sally Warhaft, and I am, thrilled tonight to be kicking off with a discussion about Australia's economy. After 2 decades of just remarkable growth in incomes and standards of living, it seems some people think, at least one of our guests tonight, that the party is over. And in fact, we're in the dog days, and we need to change our ways and our thinking if we're going to get through much tougher times ahead. So joining us are two very, very distinguished guests. Ross Garnaut is one of Australia's leading economists. He was a key advisor to the Hawke government, a former ambassador to China, the author of the Garnaut Climate Change Review, and he's currently a Vice-Chancellor's Fellow at Melbourne University and Distinguished Professor of Economics at the ANU. He is the author of Dog Days, Australia After the Boom. John Edwards was Principal Economic Advisor to Treasurer and then Prime Minister Paul Keating, and a former Australian and New Zealand Chief Economist for HSBC. He's currently visiting fellow at the Lowy Institute and an adjunct professor with the John Curtin Institute of Public Policy at Curtin University. He is a member of the board of the Reserve Bank of Australia and the author of several books, including the forthcoming Penguin special, which will also look at Australia's economy after the boom. Please give them a very warm Wheeler welcome. Gentlemen, the reason we wanted to kick off the year with a discussion about the economy is because there is talk of it everywhere. Again, in some ways it reminds me of, the early 1980s when I was a kid, and Paul Keating, everywhere you went, microeconomics, macroeconomics, terms that I grew up with but then seemed to disappear from the public conversation. We're now in a time where I, for one, am really confused about where the Australian economy is at. It seems 6 months ago, a year ago, we were spending on all sorts of big schemes, the NDIS, the NBN, Gonski. We were going to have a surplus until a minute to midnight, and now suddenly we have a new government. The age of entitlement is over. There's no help for businesses that can't stand on their own, and a feeling that we're really rapidly falling away. So with such different messages and mixed messages, I think, and confusing messages from both sides, John, I'd like to start with you about how much strife you think we're in.
I don't think we're in a lot of strife at all, and this is really where I think I most fundamentally disagree with Ross. As I interpret Ross's view, we've had an extraordinary mining boom. We're coming to the end of it, and it's going to leave us stranded. And, I think the first point I'd make is this, that actually the 10 years of the mining boom, say between 2002 2012, were not as good for Australia as the preceding 10 years. Growth was slower in terms of GDP, but even using a terms of trade adjusted income measure, we did no better in the last 10 years than we did in the 10 years before. It's also true that the size of the mining sector in real terms is pretty much the same today as it was 10 years ago, as a matter of fact, as it was 20 years ago. If you add up the entire increase in the size of our resource sector, that is all of investment in resources, that is Australian, all of the increase in mining output, all of the increase in metals output, it looks like it's increased over 10 years by about 3% of GDP. By about 3% of GDP. Now, I think 3% of GDP is quite good, but it's not amazing. And similarly, if you look at all the income, all the additional income that we've got from mining over the same period, again, it looks to be, comparing 2012 with 2002, about 3% for Australia. Now, again, these are big numbers, but they're not extraordinary. And they go to my point that, first of all, the mining boom's not over. That is, it's got a long way to run, according to our Bureau of Energy and Resource Economics. The increase in mining output over the next 5 years will be at least a third, and probably in value nearly a half. So it's by no means over. I think that's an important point. But secondly, it hasn't changed us as much as I think we sometimes suppose.
Well, Ross, we should just all pack up and go home. There's nothing to worry about.
Well, I think there's quite a lot we should be thinking about, and we could manage this descent from the height of the mining boom badly, in which case we should be very worried. There's lots that can go badly wrong. I think John misses the main point that the big part of the mining boom, the part that really had the big impact on Australian incomes, cost structure, and that leaves us with an overhang of difficulties, is the big increase in mineral prices, the big increase in the terms of trade from 2003 onwards, which raised average incomes of Australians without us producing any more. And if you just look at the increase in the prices of exports relative to imports, that factor alone added about 12% to Australian incomes. A very high proportion of that went straight into government revenues. The rest was only a small part was given out as dividends of mining companies, but a very high proportion of that, of course, goes overseas. But the big impact on Australia was increased government revenues, and so we had revenue running out of government's ears from 2003 until 2011, with a brief interlude for the global financial crisis. The big boom in prices was driven by the extraordinary growth in China in this period and the unusual structure of that growth, very energy and metals intensive, before China changed its strategy in 2011, and that started to change Australia's fortunes. But the fact that our governments from 2003 gave back the increased income as it came, as income tax, as all sorts of concessions in middle-class welfare, concessions in the tax system, increased expenditure of various kinds, and that turned out to be unsustainable. And since 2011, those prices have turned around. Since 2011, every 6 months revision of the budget estimates has been a big downward revision, and the revenue just hasn't been coming through as it was. Spending all that revenue as it arrived pushed up our real exchange rate, and that made all of our other tradable goods industries, goods and services industries, other than the big low-cost mines, uncompetitive. From the beginning of the reform era in '83 until 2003, we had extraordinary growth in diversified manufactured and services exports. We had virtually no education exports at the beginning of the reform era. They grew at a compound rate of over 20% per annum until it was our third biggest export after iron ore and coal in 2011. Well, since 2011, student numbers haven't increased. the boom came to an end. Back at the beginning of the reform era, twice as many Australians went abroad as tourists as foreigners came here. By 2003, that had turned around. Twice as many foreigners were coming here as tourists, spending a lot, creating a lot of employment in Australia as Australians were going abroad. Well, with the big increase in the real exchange rate, that's reversed. So we're back to where we were, twice as many Australians going abroad as tourists as foreigners coming here. Wine, another example. We used to import more beverages, French champagne and Scotch whisky, than we exported of wine. That all turned around. We became a huge net exporter of beverages, 0.4% of GDP, which is huge for a small industry. And that all turned around from 2003, went backwards, and now we're importing more French champagne and Scotch whisky than we're exporting wine. An extraordinary turnaround. And whatever you look at, whether it's canned fruit and other processed foodstuffs, specialised manufacturers, you get the same story. That deterioration in competitiveness to do with the high real exchange rate forces big structural changes in the economy that aren't easily reversed. Now, when we no longer have those very high export prices coming through government revenue, buoying income, when we no longer have the support of high levels of resource investment, that's coming off the peak. It will come down quite rapidly in the next few years. But that was nowhere near as powerful as the high export prices in generating Australian economic activity. With that all over, we can't generate the government revenue to meet the expectations that were created in that long period of expansion. We can't generate the employment that we used to. Since 2011, the ratio of employment to work-age population has just been steadily falling. It's fallen by a third as much in the last 2 and a bit years as it fell in the catastrophic recession of 1991, and it's still going down since I put this book to bed in the week after the election. That ratio has continued to fall. Turning these big structural shifts around is very hard. Often the fallout from the loss of competitiveness in employment, in incomes, comes quite a way after the loss of competitiveness. Victoria will feel it in the car industry a couple of years after the main damage was done on competitiveness. Now, structural change is a necessary part of economic development, but when it's forced by short-term factors that turn out not to be sustainable, then adjusting to that can be very painful. Whether or not we have a big downturn with huge pain for our community of the kind we had 74 to 83, or whether we have a period of adjustment followed by a relatively early return to employment growth, it depends on how we manage it. So I'm not saying we're certain to have a really big downturn, but I think we are certain to have it unless we manage things very well.
Well, in your book too, even if it's not a really big down, at best you seem to suggest that at best, if all the moving parts were put together perfectly oiled and everybody behaved at their super best and the policy was ideal, that would mean, in fact, moderate suffering for everyone.
Yeah, and it's moderate adjustment, moderate pain for everyone if it is for everyone. But one thing that I emphasised in the book is that one of the big changes that's happened in the Australian economy over the past, since the beginning of the century. I describe the last 13 years as the great Australian complacency of the early 21st century, we've seen entrenchment of monopoly in a lot of parts of the economy, and we've got very strong business interests that will seek to resist, and will have monopolistic positions which, if maintained, will allow them to resist a downward adjustment of income. So that will force the adjustments on others. So it's only if it's broadly based, if the adjustment's broadly based, and if we do something about those very large areas of monopolisation in our economy, force down profit margins, real incomes in those areas. It's only if we spread the adjustment in that way that we'll get away with a moderate reduction for the general run of the population.
I do think, I think one of the underlying questions is have we managed the mining boom very well? And it's an important reflection, I think, that since the mining boom began, our capital stock in Australia has increased by nearly 2/3 in real terms. That's excluding housing. Huge increase, probably not one we've seen over a similar period before. Employment has increased vastly. Participation in the workforce increased. The number of people in the workforce with various forms of training as a share increased vastly. We have ended up, after years of investment at a huge scale, we've ended up with quite a narrow current account deficit, and the reason is another thing that we did over the last 10 years, and that is, as a country, we've saved a lot more. Household savings now around about 10% of household disposable income. 13 years ago, they were minus. It was negative. So on all these points, I think we've managed the boom quite well. Now,
is quite well good enough?
Well, I think it's. I don't quite know how you could have expected it to be better, but.
I think there's one fundamental way where it was disastrously badly handled, John, and that is not running much bigger budget surpluses.
Well, let me take that point, because I think this is a very interesting point where I think I agree with you. Now, because we did run very large budget surpluses right through to 2007-8, by and large much bigger each year. And it's also, but it's also true that if you look at a measure of our structural fiscal position, it deteriorated dramatically around about 2006-7. And the reason was, as Ross very rightly suggests, is that tax cuts, income tax cuts. Of the deterioration in the structural balance of the budget, which was 6% of GDP over that period, 5/6 is accounted for by a structural change in revenue, more than half of which is income tax cuts. Well, I think that's a very interesting reflection. I certainly agree with Ross about that, but I'll tell you something else which is important and which goes quite against his point. That is the income that we derive from additional exports of mining products was almost exactly matched by the increase in our savings rate. Almost exactly matched by the increase in our savings rate. So it doesn't follow from what Ross is saying that if the government had had bigger surpluses, we would have had a lower exchange rate, because we may well have just shifted the savings from individuals, from households, to the government. We don't really know, but I mean that's a reasonable hypothesis.
I think that's a hypothesis that doesn't have support. And John, I'm talking about the failures of fiscal policy being especially in the period before the global financial crisis, 2003 to 2008. And during that period, we did have low household savings. The big increase in household savings has occurred since the global financial crisis.
That's not true. Household savings were negative in 2002-3, minus 2.5%, as I recall. Before the financial crisis, they got up to nearly 5, they're now nearly 10. In other words, the change in household savings behaviour was bigger before the crisis than it has been since.
Sally, I begin the story of the boom by saying the Great Australian Complacency actually has its origins at the beginning of the century when we stopped reform, we stopped productivity growth. We kept incomes growing for a few years early in the century, 2000 to 2003, by a huge housing and consumption boom, and that's where our savings disappeared. We partially corrected that from about 2004. The big correction came after the global financial crisis.
One of the things you write about extensively is the political culture of expectation that's now been created, where for so long it's since the reform period, as you distinguish it, so 1983 to 2001, which encompasses, of course, Hawke, Keating and the early years of Howard, that since that time, that kind of big reform has gone, and it's been replaced by a culture of expectation, of tax cuts, of payouts, of nobody ever being a loser, nobody ever being worse off election after election. We've heard that. I'd like you to talk us through not the specific policies of the reform era of what Hawke and Keating did, but about how they were able to do it and how John Howard was able to get his GST through. So big ideas, not popular, with real losers, where it seems that to be able to do that today would be almost impossible with the kind of politics that we have. I'll get you first, Ross, and then John to respond.
Yeah, well, the leaders of the reform era put a very big effort into public education, explanation of why change was needed, what was involved in it, how it would require a sharing of adjustment across a wide part of the community, and that the community as a whole would benefit from that. I think that was a very important part of the story. Probably it was important that we'd had 9 very bad years before the reform period. I hope that we can get through this one by adopting the necessary policies in anticipation of hard times rather than after 9 years of hard times. But the fact that we'd bumped along the bottom from 74 to 83 spread through the community the idea that things had to change fundamentally. You mentioned the GST reform. That was a hard reform, and I see that as really the end of the reform period, because it didn't really succeed politically. John Howard, after having said he would introduce the GST, actually lost the popular vote in the 98 election, and immediately after the implementation of the GST, the government was in all sorts of political strife, and that led to a number of initiatives that actually set the scene for the Great Australian Complacency. You had the abolition of indexation of petrol, which means that excise revenue from fuel has steadily fallen in real terms ever since. That was a huge concession that now costs $5 billion a year. To make the GST politically possible, a deal was done with the states, and especially the smaller states, for the GST to be allocated according to the Grants Commission formulae, which has got all sorts of problems for reform and long-term management of the economy. You had huge income tax cuts, which gave away a percentage point more than was actually collected net from the GST. You had then, in the immediate aftermath of the GST and the political slump the Howard government went through after the GST, the introduction of the very generous first homeowner scheme, which in some ways contributed to the housing and consumption boom that followed. So I think we can see the political debate over the GST as a bit of a turning point. As we've gone through the 21st century, in my view, it's been characterised by special interests, private interests, including special business interests, coming to exercise more and more influence on policy, being able to dictate terms on policy, and regrettably, we've seen that reach new heights since the election. For example, interest groups like those that stood to lose from the removal of rorts in the tax system related to novated leases for motor cars. Well, that cost $1.4 billion over 4 years, and there's no economic justification for that at all, but it was strongly supported by political donors to what are now the government parties. A very similar story about the financial services sector reforms, and we've got to break out of that. Governments, whether it's the current government in office, the coalition, or the current opposition in government, will not get Australia through this with moderate pain unless they're prepared to stand up the donors who've been so generous to them in funding election campaigns.
John, does our political culture support good policy?
Well, let me give you an example of what I think are the real issues that confront us. It is a quite ridiculous circumstance in Australia that we now have a federal government budget deficit after 23 years of uninterrupted growth. We have a federal government budget deficit of, say 4% of GDP, which we shouldn't have. And we know, Treasury, the Parliamentary Budget Office, know we have this because of revenue. As I mentioned before, 5/6 of the deterioration from surplus to deficit is a want of revenue. Decisions made by governments about revenue, and of that, probably more than half is income tax cuts. Now, it seems to me quite obvious that in addressing the most significant economic problem that I think we're confronted with, that is the fiscal deficit, the solution is going to be on the revenue side. Not only on the revenue side in general, it's going to be specifically about on the income tax side, that whatever this government says, whatever the opposition says, in fact, we will bring the federal budget back into surplus by leaving tax rates unchanged and allowing incomes to grow across the existing tax rates. That's what will happen. Now, this seems to me a solution to the problem that's not only desirable but inevitable. It concerns me that we're creating a kind of... We're troubling ourselves with a sort of nostalgia for the 80s and 90s. We're troubling ourselves with nostalgia for a reform period which we can't reproduce. We can't reproduce it because actually we did all those things. You can't cut tariffs twice. You can't move from a very highly centralised wage determination system to enterprise bargaining twice. You can't float twice. Well, very big changes. These very big kinds of changes are not within our gift at this point. I think actually Ross acknowledges that in his book, that in terms of the impact on productivity, the things within our grasp, while well worth doing, are not going to have a huge impact. That doesn't trouble me possibly as it troubles Ross, because actually I think the outlook for Australia is reasonably good.
Ross, what do you think we should be doing?
I put a lot of emphasis on the loss of competitiveness as a result of the increase in the real exchange rate, and it was huge. We hadn't had an increase in the real exchange rate like that in our history, nor had other developed countries. And I don't think that the strength of the growing strength of the resources sector can carry Australia through continued economic growth. We need other engines firing, and we need to get back to growth in a wider range of goods and services. Otherwise, growth will be funded through simply domestic, will be supported by domestic expenditure expansion, and we will run into external constraints sooner or later. So we've got to get those export and import competing industries firing again, and we won't get that without a big reduction in the real exchange rate. Now, we've had something like a 14% reduction in the real exchange rate since I said that it needed to be 20 to 40%. I said that in March. I repeated that in the book.
Is that sort of 80 cents to the dollar? Is it
well, if the dollar stayed the same against other currencies, and there was no difference between our inflation rate and that of other countries, and our productivity compared with other countries, they're all the things that affect the real exchange rate. But then it would mean a US dollar Australian rate of 63 to 84 cents, somewhere in that range. And it's a big range because everything depends on how businesses respond to improvement in competitiveness. Now, we're not seeing yet any spark in investment or increased exports in the other tradable industries.
Well, what we're seeing in Victoria is a complete shutdown. It feels like it here. I mean, of course,
I do think we need to bear in mind that our agricultural exports have never been higher. They're at a new record. It's also worth bearing in mind, I think, that tourism arrivals in Australia are also at a record. Never been higher. These things are quite promising. I certainly agree with Ross that we would be advantaged by a lower dollar, but you notice Ross keeps mentioning the real exchange rate. If you just take the nominal exchange rate, the difference is not all that great. We're about 14% above the post-flood average. Take the real exchange rate, it's about 35% above. The difference really is that inflation here is a bit higher, or markedly higher, than it is in Europe, UK and US, the countries that contribute their currencies to our trade-weighted index. Now, this is a kind of a very troubling problem. We don't want to go in the direction of deflation, which is the direction these other economies have gone. On the contrary, we want them to go where they wish to go, which is to have somewhat higher inflation. But until they do have somewhat higher inflation, we're going to find it much easier to close the gap on the nominal exchange rate than the real exchange rate.
And I think John's colleagues on the Reserve Bank have been a bit slow in making the adjustments that could bring the exchange rate down. Timing is tremendously important because once you lose investment, once you lose an industry, then it takes much longer to build up alternatives than if you keep it going, and then it finds that it's more competitive with a later fall in the exchange rate. Talking to people in the car industry, they say there wouldn't have been an issue of competitiveness for Toyota and Holden with an exchange rate of around 75%, around the middle of that range that I talked about. I don't know whether that's true or not. That's what they say. I said in Dog Days that part of our adjustment would be assisted by removal of remaining industry assistance, but I said the time to do that was after the exchange rate adjustment. We've done it before the exchange rate adjustment. Now, we may actually get a bigger exchange rate adjustment because of the collapse of a lot of these trade-exposed industries, if that comes out in sagging employment and the Reserve Bank takes stronger action on interest rates, which has the effect of bringing the currency down. But the timing of these things is tremendously important. So I think we've been too slow in making the adjustments in the real exchange rate.
Do you think the government, if the exchange rate had come down before and then the government had withdrawn assistance, that we'd still have a car industry?
I don't know. These are business decisions in a complicated environment, but we may have. And it would be a very sad story if that were the reality. Now, I've had people in the industry say to me that is the reality. As I said, I don't know. But the point I'd emphasise is that the transition path matters, the adjustment process matters. You need competitiveness to be strong before you take away the industry assistance. If you're anticipating a general improvement of competitiveness, which I am, I don't see Australia getting through this challenge without a substantial further fall in the real exchange rate. So I think we've got things a bit in the wrong order here.
Rupert Murdoch gave an interesting speech late last year, I think at the Lowy Institute, and he talked about that Australia needs to be prepared for economies of disruption, that we need to be more nimble if we're going to be competitive in the world. I'd like a response from both of you about that, whether we are nimble enough.
Well, the nimbleness that Rupert Murdoch promotes through Fox News and other outlets in the United States has driven the United States into deep problems. I don't want them. So I don't want a nimbleness advised by News Corp. But there are huge advantages in having a flexible economy. We've got a much more flexible economy now than we had 25 years ago, and that will mean that we'll handle these challenges better than we would have with the old sclerotic Australian economy. But we're still not nimble enough, and there's a lot of reform necessary to create a more competitive economy. In Dog Days, I focused very strongly on the monopoly in our non-traded sector. I think this is very important. I think cleaning that up is the sort of nimbleness that could really make a difference.
See, I don't know how nimble at certain levels we are. I mean, I remember the day before Holden pulled out or said they were going to be pulling out, the very day before, the state manufacturing minister in Victoria, till he was red in the face, said they're not going to leave. We don't have a B plan. We don't need a B plan because it's not going to happen. It didn't feel very nimble by 3 o'clock the next afternoon when what everybody could see was going to happen happened. Are we planning, are we thinking about, at the level that you guys work at, about what kind of industries and what kind of jobs should be replacing industries that you both perhaps agree should not have been saved by government support?
Well, I certainly, I'm not. I certainly wouldn't recommend that we continue government subsidies to keep a car industry which obviously wants to leave and which produces cars people don't want to buy. So I think we have to accept and move on in that respect. think, it's very, I don't know what kind of measure there is of nimbleness, but I do think we need to bear in mind that as an economy we've done extraordinarily well. We've done better than any other advanced economy in the world, I think, with the possible exception of Norway. And we've done well for a very long time. And here we are, 23 years later, of uninterrupted growth. Unemployment quite low, growing around about 2.75. We might do a bit better this year. These are not bad outcomes. These are not bad outcomes for the Australian economy.
I think the Victorian unemployment rate, is 6.2% today, without factoring in all those closures that are ahead of us.
The unemployment rate doesn't factor in the big decline there's been in participation. I focus on the ratio of employment to work-age population, or hours worked per person in the work-age group, and these ratios have just steadily sagged since the boom came off its peak in the September quarter of 2011, and that's accumulated into a serious deterioration in Australia's employment situation. Now, it was very good then, but that's the Australia we want, the sort of high participation rate, low unemployment that we had at that time. It's a reasonable aspiration to keep that. We haven't been keeping it for 2.5 years. And on current indicators, then those ratios will keep sagging for quite some time.
I'm going to invite you to put your hand up if you'd like to ask a question in a moment, and an usher will put a microphone in your hand, so up the back as well. And I will just ask one more question while you're pondering what you'd like to ask. Ross, you say we need a transformation in expectations about what the economy can and cannot deliver, and it requires Australians to support policies which go against their immediate personal interests after 2 decades of that not being the case. Do you think that it's possible, or are there so many moving parts in your view that it's unlikely?
I think it's possible. Regrettably, I also think it's not very likely, but mainly because we would need leaders who appealed across the community for that sort of restraint. And you can't appeal to one sector of the economy. And we don't hear political appeals for restraint, for public interest oriented policy right across the polity. And we've seen a lot of evidence of that in the last 5 months. And now that could change. A deteriorating set of economic circumstances may cause leaders to reassess, to realise that to get through this, we've got to do things differently. We've got to break the great Australian complacency of the early 21st century. It's not impossible, but at this stage, you wouldn't bet on it.
You don't think that's what the Treasurer is trying to start? Well, in fact, he's been doing it, I think, since late 2012 with the end of entitlement speech he first gave in London. You don't think that's what he's trying to do?
I think what the Treasurer's saying is what needs to be said. What the government is doing is not what needs to be done.
Put your hand up if you've...
Thank you. Adrian Williams it is. A question to do with free trade agreements. I noticed that the Toyota chief exec listed Australia's free trade agreements as one of their reasons for finding Australia unattractive, presumably the agreement with Korea. I wonder if the panel could comment on whether or not we should be pursuing free trade agreements more vigorously as a form of as a structural reform, and secondly, is there agreement with the US delivering the sorts of benefits that we expected?
Well, I love free trade, and I don't like free trade agreements. What we're talking about with free trade agreements is bilateral arrangements where two countries give preference to each other and try to exclude others. Now, what Mr. Toyota, the chairman of Toyota, was talking about was presumably the free trade agreements with Thailand, which is a major base for manufacturing motor components and assembling cars from Japan and elsewhere. The free trade agreement with the United States, which of course affects imports of Ford and General Motors vehicles in particular, but also some others, and the free trade agreement with Korea. I think there's all sorts of problems with these preferential arrangements, but I think that Mr. Toyota would have made the same comments even if we had followed a policy that I like of general free trade rather than preferential free trade with particular countries. But when you're moving towards free trade, and I had quite a lot to do with this in the 80s, transition paths matter. The pace and the order in which you do things matter. I think there are advantages for Australia in completing the movement to free trade on a general basis. I think that would be easily done in the aftermath of the exchange rate adjustment that I think needs to occur to make Australia generally competitive. So that's the context I talk about completion of the movement to free trade in dog days. But I don't like the emphasis on small group and bilateral preferential arrangements with particular countries. You asked about the US FTA. Well, if you compare the politically based modelling that was done before the FTA, if you compare the booster statements that were made about the benefits of the coming of the FTA with the United States with what has actually happened, you don't see the benefits that were talked about on the export side, which was one of the things that was hyped early on. The exports to the United States have declined from memory from something like 10% of our exports to a few percent over that period. The exports to the US have grown less strongly than to any other significant export market. In fact, for a lot of the period they were declining. The US FTA didn't deliver the benefits that were promised for it, but that wasn't a surprise to me. The big benefits come from global free trade and from Australia generally becoming a more open economy and not through special deals with particular countries.
I do think, I'm in favour of lower tariffs, and even in the case of a free trade agreement, say with Korea, that in return for lower tariffs on our motor vehicles, for example, we can get a better access for Australian agricultural products. I think that's a good thing. So too for Thailand. I certainly agree with Ross that it would be better to have a global agreement in which we get all these things and everybody else gets them at the same time. It's not preferential, but actually that alternative is not available to us at this point. And so I guess I just cross my fingers and hope that over time these free trade agreements aggregate into regional agreements and ultimately into global agreements.
I just make one other point, Sally. We are now in Asia disadvantaged in competition, especially in agriculture, with New Zealand, which has a free trade agreement with China, and the ASEAN countries, which have a free trade agreement with China, and that's seriously disadvantageous for our dairy industry in competition with New Zealand. New Zealand dairy industry is booming partly because of its special relationship with China, which we don't have, and so some of the Asian FTAs, most importantly that with China, has become important to remove the discrimination against us resulting from other countries' free trade agreement.
The milk's all New Zealand have, isn't it? Ross, you don't want to take the milk off them, do you?
I think they should compete for their milk market.
Thanks very much to the Wheeler Centre and the panel for another great discussion tonight. And thank you, coal-powered air conditioning as well. I very much appreciate it. Was it Harry Truman who wasn't fussed on economists because if you asked them what the future held, an economist would say, well, on the one hand it's going to be good, on the other hand it could be bad, and he just wished for a one-handed economist? I'm intrigued. I'm a bit of a pessimist. I'm with you, Ross, on that. Can I get more optimism from John? Can you give us a bit of gold in the future?
Well, it is a sort of a temperamental issue, I suppose, as much as anything else. I do like to be convinced. If we're going to have a very pessimistic view about the outlook, if we are going to say the country's going to rack and ruin, and we've been very complacent, feckless, we need to pull our socks up and tighten our belts, etc. I think you've got to have good arguments. You've got to have good, and I'm not convinced they're there. I'm not convinced that at all that we mishandled the boom. I'm not convinced it's over. I'm not convinced that as a country we've become complacent. I think we ought to be giving ourselves due credit for, reasonably responding to the kind of challenges that have been posed to us. I think that's a better basis on which to make policy than to imagine, it's collapsing on us.
Well, I think we should be realistic about the problem so that we can deal with them and stop them overwhelming them, deal with them so that we stop the economy collapsing from us. I think we should actually notice the steady decline in the ratio of employment to work-age population since the September quarter of 2011. I think we should actually notice the huge deterioration in growth in real government revenue since the September quarter of 2011. By noticing the problems before they overwhelm us, we've got a chance of responding in ways that make the adjustment a moderate one rather than a severe one.
John, obviously you can't, float the dollar twice and do all those reform era things that you ticked off before, but the ingredients, the culture to be able to do that is what Ross writes about, that you need to have a political culture and a community that accept that even if it's from time to time, bad news may come, and be able to collectively listen and for oppositions to support governments from time to time. This era seems to me to be completely lost, where tough decisions that make sense to everybody can be supported by both sides and explained to a community. Do you think that really can still be done with the current, with all and Ross, you write about all of them, the media culture, the 24-hour news cycle, the culture of expectation. Do you think that we really are, if you thought we needed it, John, able to cop it, to deliver it and to receive it?
Yeah, well, it partly depends on what you think we need. what I think we primarily need is the kind of human capital requirements that are going to make us a successful services economy, and particularly a successful services exporter, which means we need continued emphasis and funding for education and training. And in particular, if we're going to do a lot better in education, then we've got to make education access more equal. That, the decline in our test scores is not because the people at the top are not performing well, it's because the average level is declining. And the average level is declining because we're neglecting the people who don't have sufficiently good access to good education, particularly kids. I think that's a tremendously important thing. I've yet to see, Sally, that this government, it may be the case, and certainly the early indications were not all that brilliant, but I'm not yet convinced that this new government is going to refuse to go down that path, essentially the Gonski path. It may, and I think that would be very regrettable if it did. But I don't know that anything has changed sufficiently in Australia's political culture to motivate an argument that we're unable now to agree upon necessary changes.
Thank you for your time tonight. Hey, at work, we've been talking a lot about Joe Hockey's comments around the age of personal responsibility. I'd love your thoughts on the positives and negatives of what that construct could mean for the economy and Australians.
I think his remarks are primarily directed at his own cabinet. And particularly the National Party component of it. And I think in that respect he's got a real problem. But I think the truth is that, I think it's quite good that the new government has refused to continue industry subsidies in some cases and refused to add to them in others. I think that's quite good. They're good signs. However, I doubt whether we're going to see a huge change on the spending side of the budget. Spending as a share of GDP hasn't changed that very much for, decades federally. And it's going to be under considerable pressure because you've got the, persistent pressure for health in particular to continue expanding, and you've got to, even to keep spending from growing faster than nominal GDP, you've got to do a lot of cutting. So I don't actually expect a lot of change on the spending side, a lot of discipline, but not a lot of big change in the total.
As I said earlier, Joe Hockey's saying the right things, but it's not going to work economically or politically unless there's consistent application of that idea. There have been so many concessions to special interests over the last dozen years, especially on the tax side, but also on expenditure, the middle class welfare side, that it's only if we start cleaning that up that a generalised call to ending the age of entitlement is going to have the sort of political and economic effects that I'd like Joe Hockey to have.
Fascinating. I wish we could keep going, especially that was really delightful humour, John. I've been wanting to make a joke about two economists in a room all night, but I have refrained. It's been a really fascinating conversation, and we really do appreciate you both coming to the Wheeler Centre and giving us your very different takes on what's going on, but also your points of agreement as well. So I suppose I leave it up to the audience now to go with their take. You can, of course, get Ross Garnaut's book, Dog Days, I think, right here, right now, and he will sign a copy of it for you. And perhaps, John, we'll have to get you back here when your Penguin special comes out a bit later in the year. Please thank Ross Garnaut and John Edwards.
Thank you.
And just to quickly let you know, if you haven't been to the Fifth Estate before, it is a fortnightly event here at the Wheeler Centre where we take an issue of the day and we get the most interesting people to come and talk about it in a non-adversarial way. I think the next one in 2 weeks, it's looking likely to be on the future of the unions, but stay checked on the Wheeler Centre website. Thank you very, very much and have a lovely and safe night.